Hey guys, welcome to another video brought to you by Total Control Traders. If you know others that may benefit from the content that we provide, please consider sharing our channel. So as you can see, we're going to start with SPX today. And I do apologize for the video coming out late. We are coming out with double video on Sunday this week instead of Saturday and Sunday. So on the SPX, the chart looks very messy. Very colorful, very messy. So, and part of the reason is a lot of these are either going to be useful or they were recently in play. And we're going to clean up the chart as we go here so you guys can see what exactly I'm looking at. Hopefully I don't lose you guys as we go through all the details of each of these lines and drawings and zones. Okay. All right. Without delay, let's get into the market. We're going to do a deep dive as per usual for our weekend. And let's go through most recent zones that or lines that were in play. First, this previous top. For those of you that watched Wednesday's video, I mentioned that I will not be participating in bull play. Then Thursday and Friday we saw some bear action, which came, not gonna lie, was a little bit surprising to me because this breakout, I did consider the possibility of a breakout fake out, but judging by the volume, we were more likely to see some follow through into that 4,000 zone, but ended up being a breakout fake out. The possibility of that was slimmer. It did happen. So with that, this previous high not going to be in play anymore going forward for a little bit until we come back. So one thing I did want to mention is, remember guys, there's a lot of panic that's starting really early in the market already. And that's understandable because the last pullback on SPX, not to mention NAS, SPX was 6.09, so 6.1%. NAS was a little bit more, quite a bit more actually. And the reason why there's panic now is early on, as if you look at the pullbacks, now compare this in the Wednesday's video as well. The last pullback was 6.1%. One before that, 5.32. One before that, 3.35. And then the one before that is 2.63. So very clearly, there is a potential megaphone pattern developing here. I wonder how come I haven't drawn it yet. Let's see. Can we find a trend line? Most recent price. Let's use the red one. Doesn't work that well, hey? So instead of a descending megaphone pattern now, what we have potentially in play is an ascending megaphone pattern. So the other line we're going to delete here is this previous descending megaphone. Now I wanted to keep it on before I, instead of deleting it before the video, was you got to consider a possibility. If all these supports, now I'm going to discuss the two key zones I'm looking at coming up. Obviously one being where the arrow is pointing to. So if all the supports are breaking or are to be broken, you have to consider the possibility of a huge drop coming back down to this lower trend line. Likely scenario of that is it's extremely unlikely, just because you got to consider how fast and far we have to drop to meet the trend line and how far extended we are going to be from all sorts of 80 MAs, daily, weekly, whatever, it's all going to be extended. So the possibility of that is very slim. Whereas the possibility of the breakout fake out on Wednesday was there. It wasn't very slim, and that's why I decided not to play bulls. But the possibility of this is going to be very slim. So we're going to be deleting that. Now let's discuss these drops were the other reason why I decided not to play. So now that we know that there is a potential megaphone pattern developing, I did recently, or before today's video, I drew this lower trend line. And let's clean the chart up a little bit here. So we don't need these percentage drops anymore. now that we have discovered the megaphone trend line, let's move it back a little bit here. There we go. All right. So the potential ascending megaphone trend line. And now we're losing steam. Wednesday's video title, I believe, is are bulls losing steam, or losing whatever word was used. Essentially, if we did come up to the top, we would be a lot closer to that upper trend line. But we can see there's been rejections along the trend line. 1, 2, almost touch. Three rejections from the upper trend line already. Then down the bottom, there's been 1, 2, 3, 4 supports already. Now that we are not coming up for that fourth touch on the upper trend line, to me, it does look like bulls are losing steam. I just want to make sure here. 1, 2, no touch. 3. Still no touch. Okay. So yeah, 3 touches on the top. Makes sense that if the top is in, for the potential that the top is in. So now, let's discuss the key zones I'm looking at. The original target of 40.20 is still in place, so I'm going to leave that, because essentially right now we are just looking for a daily higher low. Now, for those of you that watch the video, you wouldn't know that I discussed that the previous 9 days of running has been significant. 8 days. 8 days of nearly 7% of run. That's almost 1% a day. So that's why the bear thesis was there, coming to the new top. Actually, let's keep this top here, so it's easier to tell. All right. So with this, the next targets I'm looking at, and the must hold zone. First target, I'm looking at this previous high before the last high. So as you can see on this last breakout high, we got decent follow through. That's what we were looking for here. It was increasing decent bull volume as well, with a significant lower wick. So we wanted to see, you see the lower wick here making new high. We wanted to see this kind of follow through, but didn't really. Well, we got that in the first little bit of the market on Thursday before the breakdown. And from here, we're looking at this previous high, which lines up with the 0.5. You can see previous rejections, multiple rejections and stall around this zone. I didn't want to draw a zone because I changed the drawing style to using lines as significant previous all-time highs instead, so it's easier to notice. So with this, you can see multiple rejections here. Once we broke over, we saw support here. And then the bulls did not want to let the candle close under. Huge lower wick, next day bounce. And then we finally broke under before another bounce over it. So, and then you can see another rejection right on this candle as well before breaking over. And back test with as a support. So this is, with these few candles here, is a little bit more choppy. So it is a considerable zone, but it's not strong. The next zone, the must hold I'm looking at, and there is triple confluence, perhaps even more, is right here, GP. GP from the low to the high, okay? The reason why I say GP is, if you look at this, there is confluence with the high before that. So 1, 2, 3, 4, the fourth previous high. The third, this would be previous, so the third previous high. See multiple rejections here, became support before breaking down, another rejection, and then coming back as support, another support, breaking down, coming back, back test, support. So this zone is a lot stronger, which lines up with GP, which also lines up with this potential ascending. Well, it's not even potential anymore because it's more than 3 touches. 3 touches or more on each side. 2 touches would already form a pattern. 3 touches is confirmed. So this rising megaphone pattern is what I'm looking at, which the lower trend line lines up with the GP and key zone. triple confluence. The potential quad confluence is this previous descending megaphone, this upper trend line of it that was keeping us down before. Depending on how long it takes, if we were to start slowly bleeding versus a quick drop to right here, if we were to have a quick drop, I would anticipate a bounce. If we were to have a slow bleed to right here, so the target would be right here instead, it would be quad confluence. However, knowing the bears action, generally there's a saying of stairs up and escalator down, which in the last case it didn't apply. It was more so a little bit of a stairs down and escalator up, and that's why I wasn't bullish when we made new highs. Now would anticipate elevator down, potential stairs up. So the more likely scenario that I'm anticipating would be a bounce from, let's see, 1, 2, 3, 4, sometime next week. '26th. Judging by the chart, I would anticipate something along the 26th. But if it were to drop faster, it would be earlier. So Monday, Tuesday, Wednesday, Thursday, that Friday. Okay, so next week we should see a bounce, depending on how fast we come down to the zone. This is a must hold for the bulls. And I would imagine that algos are going to turn on if we were to get to this zone. So ultimately, remember, this is just a daily higher low. There is no full bear thesis yet. However, if this zone were to be lost, the next must hold zone is the previous low. Obviously, once this is broken, we have made higher high, lower low. Then instead of a lower high and higher high, we will be, might be easier if I just draw it. So instead of a higher low to a potential higher high, what we could be looking at would be a lower low breaking this previous low. So a lower low to a lower high would anticipate somewhere around there before coming down to make another lower low. So two possible scenarios that I'm looking at. Oh, great. Now the chart's even messier. Let's see. This doesn't look too clear to me. Not useful. It would make sense if we make it a lower low that we were to bounce from here. Previous rejections, broke over, came right back down. Rejections again. Finally broke over, became support. And then that bigger drop, coming back, finding support in that zone again. So, yeah, would anticipate somewhere around there before making a lower low. Okay, so that is my thought, my bear thesis on the market. However, remember, always have both bulls and bear thesis in mind. Now, whenever it comes to playing in the market, obviously there's three ways any chart can move, regardless of whether the indexes or stocks. It can go up, down, or sideways, right? So that was the bear thesis that we just discussed. The bull thesis in this case is that this is a bear trap. This is the bull thesis. Bear trap, because already a lot of people are thinking, I'm getting messages on, oh, is this the beginning of a crash, or is next week also going to be bad, kind of things. It's a little bit of a pullback. I don't know why people are so worried. It's okay. It's a little bit more than a little bit pullback. But the bull thesis is daily higher low, then making a new high. Okay, that's a little bit too high. 40.20 out, 40.20 to 40.50, so right around there. But yeah, this is the bull thesis. This is the bear thesis. All right. What happened on Friday was actually quite interesting. Let's zoom in a little bit. So I changed this pandemic trend line to blue. This is the pandemic trend line. What happened on Friday was we dropped down. Well, let's do 30 minutes. I can't remember if it's Okay, so we started dropping red at 7 o'clock right before the bell, and then 7:30 we dropped further, but we can see a clear hold of that pandemic trend line. It triple held, triple bottom, lots of wicks under there. So this was a bull sign. For the remainder of the day, it's normal to see decreasing volume throughout the day. So we saw just continuous grind up. 30-minute 8 being the support. Even till all the way till 2:30, we saw a bounce from here. Now this was tricky. This is why I'm thinking it could be, this was definitely a bull trap regardless. This is a bull trap. Seeing that decent volume, decent move, hold of that point, the hold of that 30-minute 8, and then all of a sudden the next candle coming straight right back down with volume, that was a red flag. Then from there you see follow through going into the end of the day. Boom, it dropped hard. Last 30 minutes. The reason why I say Friday was very interesting was Friday was quad witching hour. Quad witching. Now a lot of people have been asking me what exactly is quad witching. If you Google it, it's Investopedia has a very good explanation of what it is. Quad witching is a date on which derivatives on stock index futures, stock index options, stock options, and single stock futures expire simultaneously. Now, this does not mean the whole day you're going to see extra volatility. What this means is, generally from previous experience, the last hour of the day should see increased volatility. So right here, may result in increased volume, arbitrary opportunities. Quad witching does not necessarily translate to increased volatility in the market, but generally in the previous experiences that I've seen for triple witching or quad witching, the last hour of the day, it can be extremely volatile. It can be extremely volatile. So this quad witching that we had experienced on Friday was the most snoozed quad witching I've seen so far. Aside from the last 30-minute, a decent drop of 0.5%. Other than that, it was a very calm quad witching day. Even quad witching hour. Okay, so very interesting. I think it was throughout the day when I was looking at the 5-minute tick, it seemed like a lot of times, especially at the beginning of the day, when they were looking to bounce from that pandemic line, it was sort of a tug of war. You can see, chop going up, going down, chop going up, going down, and then finally it started moving a little bit nicer. And then towards the end of the day, more chop before coming right back down. So now that we discuss what the daily looks like, both bulls and bears thesis, we discussed what exactly happened on Friday, what is quad witching hour. Now let's take a look at chart. Still looks quite messy to me. So keep this megaphone, rising megaphone pattern on your top watch. This is the current pattern that is playing out. So use that, use the two trend lines. And this one I likely won't be using anymore because I want to see what the reaction here is. First reaction gonna be, there's so many lines here. Oh, I hate this. Let's do it this way, right here. All right. This is the 0.5 back test of the previous trend line. See if we get a bounce there. If not, must hold will be right at the GP. Okay. All right. Next is NAS. On NAS, we are still looking at the daily higher low formation, and you can see that NAS is now stronger than SPX. NAS Friday was green. SPX Friday ended up being red. So, knowing what happened previously, that NAS had a bigger pullback, and remember this goes back to the QQQ over IWM chart. Double top on the QQQ over IWM. And now on the weekly, we are extended, bouncing from trend line, meaning NAS should be looking stronger for during that bounce to the weekly trend line. So at least over the next, let's see, so this week, next week, potentially the week after. So next week or two, I would still expect relative strength in NAS versus SPX. Now, knowing that, make sure you play accordingly. It would be still a hard market for both bulls and bears to make money. Meaning, might be easier to just play ETF. So a couple to consider would be TQQQ, SQQQ, SPXX, SPXL. What is the other ones? TNA, TZA kind of thing. So play accordingly. Know which sectors are stronger, which sectors are weaker. Next 2 weeks would anticipate NAS to be stronger relative versus SPX. If we're to bounce from where NAS came to, okay, so we got a triple rejection from GP. If we were to bounce from where NAS is, this was the zone that we were looking at. And what is this? This is right around that 0.5. So NAS would be considered strong, and the potential of inverse head and shoulders is still in play. Neckline to break. Neckline to break would be right there. Once next week, we're going to have to see confirmation on NAS. So it's going to be relatively hard. I do see another day or two of hanging around here before the bounce up. However, SPX should be in the bearish trend. So then it makes it hard to play either way. While NAS should be looking at an inverse head and shoulders pattern, SPX is looking for the daily higher low. So it's a mixed market. Just understand what you're playing and how you're playing it. Be prepared. So that's how NAS. Next, Dow's looking for that higher low as well. Now this is the kind of new all-time high follow through that you want to see. So Dow is still relatively strong. Why is there two of them? So if we're looking at this, would be looking for a back test of this previous high. If we're to bounce from there, how does it look on the fibs? Doesn't line up with much. Would be around that 0.5, but doesn't line up with much. So this, now we know, is not. Oh, interesting. This is a megaphone pattern, similar to SPX, but we did break bull over the megaphone pattern. You can see multiple rejections, one, multiple, and then one more rejection here before breaking over, and then bouncing on Friday from the trend line. Now this one doesn't work as well on the lower trend line because we had 3 touches, but the last pullback was strong, did not touch the lower trend line. So Dow of the 3 is still remaining the strongest. Speaking of which, I am going to make a note to look into Dow's. What exactly is traded under Dow's? If you're putting bulls, Dow tickers should provide much better chances for bull plays. All right, so that's the indexes. Let's take a look at the indicators, leading indicators. These are key to determine where the market's going. So chop, essentially a weekly bull flag. Yep. So US 10-year over 2-year is still essentially a weekly bull flag, which I would anticipate somewhat of a pullback coming up. Huge weekly bull bear divergence. And what does the US 10-year look like? It negated the bear divergence on the US 10-year. That is crazy. There's a bear divergence right here. Made a higher low, made a new high, another bear divergence from here to here, higher low, and a new high. Wow, that is crazy. This increased momentum trend line is still holding too. The moment that this daily 8 is broken, and this trend line seems like it's just grinding up along that now, and this trend line is broken, would anticipate further follow through from there. Next trend line down at the very minimum. There's not even a whole lot of decrease either. If we're to measure it, it's 10%, and we have over this last move, we have rose over 75%. Jesus, wow! Had you bought US 10-year bond over the last 34 days, you would have made 75%. No, that doesn't sound right. It's US 10-year yield bond. Okay. That's crazy. All right. Let's take a look at VIX. So on US 10-year over 2-year, not getting much of a sense of what's going on yet. Now remember, 10-year over 2-year is a much more forward-leading indicator, as we can tell from here. Started tracking this in end of 2018. Somewhere end of 2018, 2019 kind of thing. As we, it made news that it became inversed. First inverse was, where'd it go? I don't really see an inverse here aside from 2019. Maybe that's where I started tracking it. I remember making headlines, US 10-year over 2-year inversed. So it might have been here that I started tracking it. And even from there, it took 122 days before the market actually corrected. Now, this is one of the highest ratio of without failure forecasts from what I read. I didn't necessarily backtest it, but from what I read, that's the case. Every time that 10-year over 2-year inverses, there is going to be a market correction that's coming up. And so that's why I tracked it in 2019. And then it took a lot longer than I expected for the market to actually correct. But the forecast was correct. Okay, so VIX. What are we doing on VIX? We are bouncing from that lower trend line. A little bit of rejection. So rejection from the upper trend line. There is no clear break yet. Based on VIX, I am getting a sense of, a little bit more grind down before the breakout. 20. Yeah, it's a little bit early. Only 11 trading days so far. Half of the way. So that's it's just mixed signals everywhere, it seems. There's no clear signal on US 10-year over 2-year. There's no clear signal on VIX, especially considering, that we're rejecting from the upper trend line. And VIX is giving me a sense that there's market should continue to be bull, while SPX is giving me a sense that the SPX is gonna be bear over a little bit, over the next little while. So let's take a look at US dollar. US dollar is still continuing to reject from that upper trend line of the channel. We are still missing a third touch on the bottom, the lower trend line. So with this, ultimately, over the shorter term, I would still anticipate, of all the indicators we looked at, I would anticipate more bull market to come over the shorter term, the next few weeks kind of thing. But over the longer term, there is something big brewing up. There's talks that this is going to be the biggest crash. Again, I still don't believe that. With being a full-time day trader, the best to approach this is look at it on a daily basis, which I do anyways, and then from there make the best decision based on the information, the most recent updated information that's provided. So with the most recent updated information that's provided, I want to see a break on US dollars in order to give me full bear confidence. We are still stalling on the upper trend line, and we are still missing a third touch on the bottom, on the lower trend line of the channel, meaning would be looking a little bit more bullish over the shorter term. On the even shorter term, based on SPX chart, 4 hours, rejecting from 4-hour 8, I would anticipate bearish action on the even shorter term, coming to that 0.5 for the GP before the bounce. Okay, so overall market is mixed. The shorter term, less than daily wise, am looking bearish. The medium term on the daily charts, so you're looking at weeks kind of thing, a week, 2 week kind of thing, those am looking bullish. On the even longer chart, on the weekly chart, so you're basically looking at a few weeks at a time, I'm looking bearish on that. All right, so that's it for the market. Let's take a look at oil. There is a potential of a back test of this trend line now that it somewhat lines up with its previous resistance, which we didn't see much resistance on. So it could be maybe moved over here instead. Would make more sense. So on the weekly chart, we are pulling back. On the daily chart, huge pullback on Thursday. Yeah, on Thursday. And would anticipate what is going on with my chart? Would anticipate a bounce somewhere around here. Looks a bit too dragged out though. I don't imagine we're gonna, actually we are extended from the daily 8, so there's a chance that we bounce from here and then slow grind down and then bounce to meet the daily 8 again before the final leg down to meet the inconfluence area. So from here, let's say down, up, down. That would be something I'm expecting. All right, let's take a look at the hottest tickers. First one, Bitcoin, 60,000. There is so much hype that again, I want to touch on the fact that I'm hearing from a lot more and more sources that are saying that there's more new investors coming in than ever, whether that's into the crypto environment, the crypto space, or the market space. A lot more new investors are coming in, have been coming in, and are still coming in. That provides extra caution for me. So when I look at this, there's bear divergences. Generally, when I see this, it's a bear divergence here, had a decent pullback, and then making a new high. This was, this is like retail investors that have FOMO. That was like, okay, I didn't get in from back here. Oh, I missed this high, and oh, there's a pullback. That time to get in kind of thing. So, I think, to my perspective, I think this is retail FOMO, and I think there's gonna be bear side to come. We can see RSI is losing steam over the last 3 highs. We got to 90 on that first high, and then last one was 80, and then this one was 73. So RSI is losing steam. Be aware of that. When this comes down, if and when this comes down, it could be a hard pullback. Don't be the one that gets caught in holding the bag. So what happened during the last time, just as an example, we topped out right under 20K. Then from there was, how long before, actually, let's do a weekly. How long before it came back to 20K? This is 20K? It's right about there. 1924. There we go. 157 weeks. That's about 3 years. You don't really want to be stuck holding a bag for 3 years. Remember that. So be agile if you did enter somewhere around here on the new highs. And we are seeing a lack of follow through on the new high. So that is a red flag. Weekly 8 catching up. So in that perspective, looks great for the bulls. All right, next is Tesla. There is a lot of bear thesis for Tesla that's out, and we can see a rejection, continuous rejection on the weekly 8. We broke down under the weekly 8, bounced up to the weekly 8, and we are rejecting from the weekly 8 again. So chart overall is weak on Tesla. The thesis of Tesla that I've been hearing is that there's a target of 400 some. Now I can't see that. Let's take a look at the weekly chart. So now that we see a rejection from the weekly 8, this channel must hold was a perfect bounce, which lined up with the GP. For those of you that played it, I personally played this and it was very rewarding. Okay, so this GP along with this lower trend line of the channel bouncing to the weekly 8, that alone was 178 points, 33% bounce in 1 week. That was amazing. Hope some of you caught it. From here, I am looking bearish on Tesla. And now if we're looking at it, 0.5, this previous high, first target, previous high, we have ran crazy. So you're going to have to run from the fibs from the low to the high of, what is it, 900? 70.1 to 900. 70.1 to 900. Yeah, that's right. So using this fib, because we already bounced from the GP. If we're to lose this GP now, we are looking at a further fib out. We are rejecting from that 0.5 as well. So if we're to lose this previous low, first target, I don't imagine this is going to hold the previous high of 502.50, where we can see rejection and a slight rejection before going over. Again, Tesla was extremely strong back here. This was the SPX uplisting. So first target would be around 500, 502. Then here's the key zone, which we might have to redraw actually. The previous key stall zone before the SPX uplisting news. This zone alone is around 406 to 460. So that would be the next target after losing the 0.5, 502. And then the ultimate most ideal entry is going to be around 359. So the bear thesis that are out there, just keep those in mind, because there's, when you look at the chart, the likely scenario of that happening is high, especially if this previous low is broken, this previous GP is broken. We would be looking at much further down prices. So be patient on your bull entries on Tesla. Or if you want to play bears. On the daily, chart actually looks okay. Bull volume is outweighing the bear volume. And so far, what is this bouncing from? We are finding a bounce from the 0.5. So that's actually not bad. On the daily, it looks a little bit more bullish. We're going to have to see some follow through coming next week. Monday, Tuesday, breaking over the daily 8 to give somewhat of a bull confidence. Next is TDOC. So the TDOC chart actually looks pretty nice. Big gap down right into that key zone, finding support, holding that GP. And then the next day, we essentially still held that GP. And then the day after, we held the GP. Now all three are working from the key zone as well. The chart actually looks pretty nice. regardless of daily, 4 hours. 4 hours, we are already trading over that 4-hour 8, and we can see increasing bull volume. TDOC ARC has been buying, and the chart looks pretty decent. Bull confidence is coming in. Lack of bear follow through. Potential reversal on the 4-hour. 30 minutes already reversed. No, not yet. 30 minutes still chop. We're going to need to break this high of 191, 192. Yeah, we're going to need to break a new high of 192. But we do see Friday end of day bull volume coming in. So that gives a little bit of a confidence. TDOC is one of the top watches for me. Next is Apple. Apple is similar to Tesla. I saw a chart somewhere over this weekend, and the bear thesis on Tesla or on Apple, it's gonna make, oh, that's what it was. Was it weekly 200 EMA or something? So if we were to look at this, wow, it has ran up quite a bit. So from just the fib standpoint on the weekly, same thing was what we're doing for Tesla. The retracement back to the 0.5 would make sense. That alone is around the $100 mark. The 96 to 183, that would be the first target. GP does not line up with his previous high, and not much support around that GP either. So 0.5, bulls are going to want to hold that. Trend is looking like it's about to reverse. So the bounce is a lot weaker than ideal. We are rejecting not only from the 0.382, but we closed under the weekly 8. We touched it, and now we're rejecting from it. This daily bull divergence was not strong whatsoever, meaning would be anticipating further price actions downwards. Next, PLTR. So still looking weak on PLTR. I think I'm 40 out of it now. Yeah, it doesn't matter what time frame you're looking at. PLTR is still remaining weak. As long as we are trading under that weekly 8. Right now, zoom out. Make sure you zoom out on most of your charts. Take a look at what the weekly looks like. For the charts that are trading over weekly 8, they are going to be relatively strong. Relative strength versus the indexes versus the other tickers. At most of the tickers that, tech, they're going to be trading under weekly 8. So it is decreasing bear volume, but we're going to need to find a support zone first. Don't be early on this name. Watch for the bottom out on PLTR. This should provide a great trade. Bears losing a little bit of steam. So this is still a relative new ticker. We see that RSI on the weekly doesn't have too much history. Let it base out. Let it base out. Next is W. W, we are finally breaking over the wedge. 4-hour 80MA is your guide. We saw the hold. Where was it? How come it looks a lot choppier than I remembered? We saw the hold over here. Yeah, over here. And then we broke over the inner wedge, but then it bled throughout the day. And then beginning of Wednesday, we saw a decent bull coming in. Then breaking over again. That was the confidence, because this, I don't know if I would call this a breakout fake out. Bear volume wasn't really there. It wasn't like a breakout and a huge bear volume coming in to break us down. So essentially this was a confirmation. We broke over, came back to back test that 4-hour 8 again, and then now we're breaking over again. This trade is a monthly bull flag, so be patient on it. it will take lots of time for this to play out. Monthly, as you can see here, let's remove some of this previous drawings. All right, so monthly, as you can see here, bull pull, bull flag, holding that monthly 8. This was key, holding the monthly 8, and now we are seeing follow through on the bull flag confirmation. We're gonna need to break over the previous high of right here, which we are seeing a little bit of rejection from 350 zone, and then after that is 369, and then we're gonna be seeing all-time high, a new all-time high. Volume looks very nice for continuation. We still have a week and some, a week and a half left for the month, so we are likely going to see increasing bull volume. Wayfair looking very nice. All right, so that's it for today's video, but I did want to cover one more ticker just to show you guys what exactly is what I'm referring to on the market and what's giving me red flags and choppiness. Aside from choppiness, just a bunch of red flags that's showing up for the long term wise. If we look at this, is just one example. There's lots of tickers out there that look similar to this, where it's been in a, what is this, since pandemic, you know, crazy trend going upwards, and we were far extended from the monthly 8. Now we're seeing bears showing up. There's a lot of charts out there that looks like this. Logitech is just an example. It has been, for those of you that are in it, were in it, congrats. 281% steady mover, weekly just been grinding along. We only ever lost the weekly 8 once. Yeah, since the beginning of this move, since the pandemic lows, the week after the pandemic low, we started closing over the weekly 8, and there's only been 2 candles that's closed under the weekly 8 ever until recently. Now the weekly 8, we not only are we closing under it, we lost the GP. Let's redraw this GP. Is it not nice? So Logitech is finding support at the weekly GP, and now we're coming up to the weekly 8. This is going to be key. If we were to reject from the weekly 8, we are going to see further downside. So far, bull volume not convincing, and this is a lot. There's a lot of charts out there that looks exactly like this, and that's why I'm being cautious on any bull plays. So make sure, if you are trading bulls, if you're a bull player, consider switching to bears, or always be patient. So the motto of our channel is patience pays and persistence perfects. Make sure to exercise patience during this time. You want to see clear direction. Indicators are not giving as much. Stocks are telling us there's further downside. Indexes are looking for higher low before the potential higher high. So there's no clear directions anywhere. Trade less, use less sizing, be extra agile. So that's it for today's video. Don't forget to give a thumbs up. If you're looking for that financial freedom and enjoy the content that we provide, please consider subscribing to our channel, where we provide new videos daily. And remember, the best compliment you can give is by spreading the word about our channel. Also, check out our website and Twitter. Website at totalcontroltraders.com and Twitter at _TCTraders_. We offer 7-day free trial that was recently ended. So it will come back in the future. If you are interested, make sure to check it out. Our trading community, where trading ideas are shared, charts are reviewed live, as well as my personal trade callouts, which is the most recent semi-monthly accountability check, ended up being in 90% correct. Hope you guys stay safe and be in control. Thanks for watching. I will see you in the next video.